ServiceNow Stock, NOW is the ticker symbol, been trending higher and higher and higher. Revenues are increasing, future projections on revenues continue to increase, and I baked that into some analysis asking the question, with continually growing earnings and revenue, is ServiceNow stock a good investment? Let's jump in. My initial take, a little pricey. Way pricey. Might be one of the most overpriced stocks I'm looking at within certain sectors. Let's jump in and I'll show you what I'm looking at within the computer. If this is the first time you're stopping by my channel, thanks so much for stopping by. Make sure to hit the like and follow button. What I do is I break down stocks from a value investing perspective. I'm also an economist and I break down the entire economy, taking a look and asking the question, where do we go for the stock market based on economic indicators? ServiceNow just reported their earnings, year-over-year revenues beating estimates. Same with earnings. The financial news was actually pretty good. But what I'm also seeing for ServiceNow, a lot of downgrades because of the price itself, not because of the growth, that it's just simply overpriced at this point. And if you look, it's not really that much higher, but we were at 680 not long ago. Prior to that, we were down to about 550. We're at about 765 right now. So that's about a 40% increase. We've seen a lot of stocks moving like this over the course of since the bottom we saw in late October, early November. But what is ServiceNow stock valued at? Here's a bigger look at, you can kind of see that not long ago, we were at ServiceNow stock was trading about 400. Let's break things down. Quarterly revenues, 2.44 billion. Continually increasing revenues. This is the hallmark for me for a solid value investment. You want to ask the question, what can you reasonably assume? And when we see continually increasing revenues, someone who buys ServiceNow stock could reasonably assume that given the pattern we're seeing, they're going to see continually increasing revenues. And here we look at projected revenues over the course of 2024 and 2025 for ServiceNow stock. The 1090 is this is elevated from what I had from the last time I looked at this video. Now let's break something else down. Looking at margins for ServiceNow, pretty decent, 78.83%. Moving forward though, operating margins, their operating costs are really eating into the middle line, 11.08%. Q4 net margins, 12.11%. There was some financing there that pushed net margins higher above their other margins. Price to earnings ratio. It was really bad before. Now it's merely really bad. The broader stock market trades price to earnings ratio roughly about 30, anywhere from say 27.5 to 32.5, depending on what kind of mood the stock market is in any particular phase. They've really been starting to push things over the past couple of weeks because it looks like interest rates are at the very least, going to remain where they are and not go higher. I wonder about that nonetheless. If the price to earnings ratio for the broader market is trading at 30, something that's trading at 83.98 is considerably, that's about 150%, pushing 200% higher than the broader stock market. And that's your first indication that this stock is pricey. Breaking down projected earnings per share, looking at 2024 estimate $13.07. I'm not really factoring in the $15.89 for this analysis, but let's break down the $13.07. The Treasury yield, United States Treasury yield, your benchmark investment rate, trading about 4.1%. It'll bobble around a little bit. We might see some moves lower, we might see some moves higher, but probably between say 14.05 to 14.25 range for the next couple weeks. There's your benchmark. QQQ stock. This is the NASDAQ ETF, 3.416%. Now, when I break down QQQ stock or XLK stock, which I have listed just below there, I have all 500 stocks within the S&P 500, and I looking at just one share, I do not weight the index, asking the question, next 4 quarters, what are the next 4 quarters, to add those up, divide that over top of the current price that gets you yield for any particular stock. Just one share. I do not weight anything. So QQQ stock, which of course is 100 shares, 3.416%. Your treasury yield, 4.13. XLK stock, this is the technology sector, 3.2%. Looking at the 15.89, ServiceNow stock, 2.077%. Now, that 0.07, just for the record, yesterday was trading sub 2%. This is one of the priciest. Now, keep in mind, I'm using 2024 future projections. So I'm already baking in the fact that there's revenue growth, there's earnings growth. That's already cooked into this. This is a stock that traditionally trades at a much lower price to earnings ratio. We have seen a kind of a much higher, but we have seen that slide lower. It's simply overpriced. I would definitely not be buying this stock. The eventuality from what I see is ServiceNow stock does move lower because individuals are going to take profits, despite the fact that there is future revenue growth. I've baked that into this analysis. I've said there will be future revenue growth. This is what it is. So this is the yield. You're getting half as much yield buying ServiceNow stock at this price versus what you could get out of the U.S. Treasury yield. Because of its over elevated status, ServiceNow stock, should the stock move lower, there's a lot of risk baked in there, and there isn't much more growth. The growth rate isn't accelerating beyond a level that would justify buying into this particular stock at this price. XLK stock, of course, is the technology sector. That's that orange bar there. And I wanted to kind of point out where ServiceNow stock was compared to the broader stock market in XLK stock. Now, XLK stock, if you recall, 3.2%. So ServiceNow stock is trading from a valuation perspective. It has moved much higher than the technology sector, which we can see there was only about 45% from all the way back August of last year, versus 80%, which 77.5%, what we're showing. My take on this: ServiceNow stock, great value investment from earnings perspective. Margins are a little thin. I'd want to see something above, say, 12.5% net margins, but they're pretty close to that, considering what you're getting out of financing margins coming in and adding to the bottom line a little bit. Right now, yield, too low because price is too high. I would not be surprised to see ServiceNow stock move lower. Some individuals are probably going to take profits. But I don't really see that catalyst other than someone's going to say, I don't think it's going to go any higher, let me just get out. I don't necessarily see a broad sell-off. But should ServiceNow continue to increase their revenues like they are, and earnings are there, and margins, net margins are above the S&P 500, if ServiceNow stock were to dip, that would be a solid buy. A lot of the analysts that I've looked at, ServiceNow stock, are starting to downgrade it a little bit, saying you're overweight because it's too high. Great value investment, too rich for my blood. Make sure to hit that like and follow button. I break down stocks like this. We'll see you in the next video.